I've had people make fun of me in the past. Ha ha ha, you're into trailer parks. I'm like, yeah, but look at my bank account. Look at this money hitting the account every month.
There's so many different ways of value adds, and that blew my mind when I got into it, how much creativity there is.
Turning park-owned homes to tenant-owned homes, that's such a win-win for everybody, because for us, it lowers the expense ratio. But for the tenants, you give them a sense of ownership. Everyone, welcome. We are really excited to have you here today. If you have been looking at real estate investing, you probably heard about apartments, right? That's an option that you hear about a lot. But today we're going to talk about a space that's been quietly outperforming, right? Which is mobile home parks. So we're going to break down how mobile home parks compare to apartments, why we believe they offer stronger short-term and long-term advantages, and what investors should be paying attention to right now. So I'm Vinny Carriers, and I'm joined here by my business partners, Tim and Matthias. Say hi, guys.
What's going on, guys? Hi.
So before we get into comparisons, I want to start with something a little bit more personal, right? So how did each of you get started in mobile home park investing? Tim, we'll start with you.
Short version is I heard about it on a podcast when Brandon Turner was talking with Frank Rolfe about mobile home parks, and it sounded interesting, and I was drawn to it, and so I just went for it.
Matthias?
Yeah, it was interesting for me because I had a high earning W-2, and how I got into real estate was because of tax benefits. And then I was just ignorantly thinking, oh, there can't be any tax benefits for MHP because there's nothing to depreciate, which is so wrong. And then at some point in the mastermind, I met Tim and he told me all about the tax benefits and, the land improvements, which are on shorter schedules. So you have actually one of the best depreciation in any commercial asset, which then attract me to the asset class, among other benefits. So actually, Tim was the one that got me in because I started in small multifamily and moved into multifamily. And then when I met Tim, he drawn me to the dark side. And I'm really glad he did.
Yeah, same here. So when I started, I wanted to learn about investing in real estate. And the first thing that came up was apartments. And I joined the mastermind, and that's where we all met. Initially, yes, so I was learning about apartments and how to underwrite, how to raise capital, all the good things, right? But there was a lot of risk around apartments. And then I met Tim, and again, he was a mobile home park guy. He was passionate. And yeah, I think the biggest thing for me was that mobile home parks, at least the ones we find, they cash flow day one, right? And with apartments, you need to fix the units before you start getting some cash flow and getting some money back to their investors. So it could take a year or whatever that may be, a year or two before you start getting distributions. And there's a lot of risk that goes into that year or two, right? You can have contractor issues and that kind of thing. So that's what gravitated me towards mobile home parks. It was a little safer from day one.
Wait, did you actually say apartments and cash flow in the same sentence? Because I don't think they really do that.
It's outflow. It goes out.
Okay.
It's wrong direction, cash flow.
So as you can tell, we're setting the tone for the whole webinar here. So Tim, let's start simple. All right. When most people think about real estate investing, right, they think apartments. We all started that way, right? So why don't people talk about mobile home parks as much as apartments? Why don't people think about mobile home parks? They just initially gravitate towards apartments.
Yeah, everyone hears about apartments. You see apartment syndicators and they're in nice suits and you're like, man, that guy's making a ton of money. And I wish I could be like that someday. Flashy veneer. And that's what apartments are. A flashy veneer that it's like, oh, well, yeah, this is a nice building and, it's got to make money. But then when you look under the hood, a lot of times you're like, oh, well, it's not producing any cash. Yeah, it looks pretty, but all that cash is going to all the crazy expenses. Even myself, right? So when I was I bought my first mobile home park in end of 2019 and had a few, and I still when we were in that mastermind, I was like, man, I need to get into apartments. That's where the money's made. That's how it is. And then I got into an apartment and I was like, where's all this money everyone talks about? What is this? It's not even returning money to investors right now. It's barely treading water. So like I got under the hood of it and realized, okay, that was just something that it looks pretty, but it doesn't actually produce anything. You take that versus what people hear about mobile home parks. I mean, you come back to 8 Mile and trailer parks and all sorts of rough, like, you have bad visions in your head about it, but it's the same, like, opposite as with apartments, is once you look under the hood, you're like, oh, wait, this is just affordable housing for people who need affordable housing. It actually cash flows very well. We've never missed a pref payment to investors. It's so much better. Like the mechanics are just so much better than an apartment. And you look at Grant Cardone and he's like paying 3 prefs or 4 prefs, or if he's even paying prefs. You look at Brandon and the apartments that they do, and we all heard that they, like, investors lost all their capital in one of those open door apartments recently. And so it goes back to, it looks pretty, but it doesn't give you what you think it's going to give you. Like, that's why I love mobile home parks, because the fundamentals are there. They're safe assets. They work well for us, for our investors, and for making the communities nicer places to live. It's a win across the board.
I agree. And I think you're spot on when you talk about that stigma. When I talk to investors, they say, what, trailer parks? I'm like, no, these are mobile home parks, and they can be a safe, clean place for families to live in, right? And then I gravitate towards the numbers. And I'm like, these are the numbers. And that's when their eyes open up. I'm like, oh, I did not know, right? Matthias, at a high level, according to you, what is the biggest difference between owning apartments and owning a mobile home park?
There's a lot of differences, really. I mean, we talked about cash flow. It's a lot better. It's mainly because the expense ratios are lower. I think the biggest one is really sticky tenant base. There's not a ton of turnover. A lot of people that live in apartments, they don't want to live there forever. Of course, there might be some, exceptions to the rule, but the majority that lives in apartments, they're probably early in their career, or they live, with a girlfriend or whatever, but somewhere they're getting married, they're getting a dog and 2 kids. They're not going to live in this 2-bedroom apartment anymore. So they're moving to a house. And often, mobile homes, there are 3 2s, there are 4 2s, there are 5-bedroom double wides these days. And so this can accommodate larger families as well. And you have a plot of land with it and etc. So people actually plan to stay there for a long time, if not forever. We have tenants there, in one of our parks. She's been there since 1994. It's like 32 years. That's a long time, which is amazing, right? So I think that's the biggest difference, that we see tenants sticking around for a long, long time. And that brings expense ratios down because you don't have to take capital for turnover and turning units over. And many times the units are owned by the tenant. So there's nothing to really renovate for us because the homes are owned by the tenant. And there's a lot of other small little things. There are a big difference to apartments, but I think those are the biggest ones, where I think the numbers swing heavily into the favor of mobile homes compared to apartments.
Yeah, absolutely. Tim, we touched a little bit on cash flow. One, can you expand on transition to mobile home parks? Was the tax benefits? So can you touch on both?
Yeah, absolutely. I was part of an apartment, 34-unit apartment, and I looked side by side, like, okay, where's the money hitting the account? Crickets over in the apartment. Nothing, 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 nothing. And nothing to investors that whole time too, because it was rough and it was trying to get something stabilized in an area that is, I mean, people they'd stay a couple months, they'd wreck the unit. And so like all that cash flow would go back into the apartments to renovate. Whereas the mobile home parks, like I said, we never missed any pref payment with our investors. Like it's super steady. And so now I have this money coming in from, I have ownership in a lot of different parks, so a little bit in a lot of different places, but it's very consistent. It's very similar to like a W-2 in terms of consistency of paycheck. When you have a W-2, you got that and you know how much is going to come in every 2 weeks or whatever. And that's kind of how we are with our mobile home parks. It's very consistent. And the cash flow is so heavy in comparison. Everyone says like, oh no, not this trailer park. And, I've had people make fun of me in the past. Ha ha ha, you're in the trailer parks. I'm like, yeah, but look at my bank account. Look at this money hitting the account every month. Like they stop laughing then, it's so funny. Anyway, yeah, I could go on for a while. So in terms of the taxes though, that was something that I had no clue on when I started mobile home parks. I was probably in it a couple years before I realized that was something you could do. And I mean, at that time I had a W-2. It didn't affect me a whole ton, but now like I'm a real estate professional and I always joke like, what's taxes? And, whether or not that's a good or bad in the system, it's just how the system works. And, the IRS, the laws, they really reward people who own real estate and especially, real estate professionals. And so all of the depreciation, all of these losses that the mobile home parks generate, legal on the books losses that our CPA gives us. My personal tax return is negative, so meaning I'm not paying any taxes on anything. It's just the reality of how it works. And why it's so heavy for mobile home parks is because the way the IRS sees a mobile home park, it's all these 5 and 15-year land improvements. So real quick, depreciation schedule, you buy an investment property, the IRS says, okay, we're going to let you write down the entire purchase price of this versus like over this many years. That's the real like quick and dirty of it. And so with like houses, it's over a 27.5 year schedule, okay, you bought this for $1 million, divide that by 27.5. You can depreciate a tax, loss, a paper loss, a non-realized loss because you're still cash flowing, but you can, put that against your taxes each year. With mobile home parks, it's all these 5 and 15-year scheduled land improvements. And then with the 100% depreciation right now, we're getting a ton of depreciation, year one depreciation for investors. It's crazy. We're like easily hitting $1.50 in year one depreciation for every dollar invested. So like, I've said it many times before. One of my favorite times of the year is when we get everyone's K1 back, and then I can send all these big negative 150,000 for the 100,000 you put into this deal. So I'm saving a ton of people on taxes. Again, I'm not going to argue whether it's right or wrong or whatever. I'm just saying that's the reality of how the tax system works. And everyone who works with us is able to take advantage of it.
The more you know, right? Matthias, you alluded to the turnover piece. Can you expand on the comparison of, apartments and mobile home parks in terms of turnover?
Yes, it's definitely a lot higher on apartments for the reasons I mentioned earlier. People buying their own home most of the time for mobile homes, and that's a significant investment. They're placing in your park, and then they're not going to move them again because it costs $10,000 to $15,000 to move a home, depending on distance and other factors, right? If it's a double wide, if it's a single wide, etc. It doesn't cost much to move out of an apartment. As a matter of fact, you can probably move like almost, just by sweat equity and just, get in U-Haul or whatever for a couple of $100 and then just move across town. But if you want to move your mobile home, it's going to cost you 10 to 15 grand, which makes a very, very sticky tenant base for us because it's not worth for them to move. That's why we like to buy parks that under market rents, because we can stair step up, to be ethical about it and go, year by year up to market rents. But even if people would consider saying, oh, I have to pay $50 more a year now, they're actually going to look across town like, oh, I want to move my mobile home. And I realize, oh, they're charging $500 already. And these guys charging $350 now. It's still a good deal to stay here. Especially I don't save any money and have to pay 10 grand or more to move that mobile home. So it's a no-brainer to stay for them, obviously. So there's exceptions, and some people move their mobile home because they want to consolidate with family and then maybe across the country or something, or another state. That happens. I mean, if there's turnover, but it's significantly lower than with apartments. I'm currently still in an apartment deal, and there is constant turnover. It never stops. There's always somebody moving out every month, and there's only a 26 unit. So it's always something going on. We don't really have that in our mobile home parks, right? Where we see turnovers, we have park-owned homes where we own the home and people jump in and out. That could happen, but we turn them into, long-term, lease with an option or rent-to-own contracts where people actually buy them and do a down payment so they have skin in the game. That then they behave like tenant-owned homes. So that's actually one of our major value add plays that we're doing. because a lot of operators, even the mobile home park field, they stay away from park-owned homes because they have higher turnover compared to, tenant-owned only parks. But when we take them over, we turn them into tenant-owned home parks, and they have a lot more stickiness to them. They have a lot lower expense ratios, and we can drive the income up at the same time, so the NOI expense tremendously. You can't really do that with apartments that easily. And while you can infill and bring in occupancy up, right? You cannot just add an apartment, unit next to the apartment building that you have, if it's garden style, whatever. It doesn't really work that way. You can always expand with mobile home parks very easily. So that's pretty cool. And also people bringing their own homes into your park. There might be in another park, they're overcharging and you might be the better deal in town, and they move their home into your park. It's free infill. You don't have that in apartments. It's not like somebody said, I'm going to bring my apartment over to your apartment building. It doesn't happen. So we love that with mobile home parks. So many different ways of value adds. And that blew my mind when I got into it, how much creativity there is there and how many value add levers you can pull, because every deal we have has like 3 to 4 levers we can pull. Even if one fails, you're still going to have tremendous returns because of it, because of the other levers you can pull. So the vacancy part is always extremely low on the mobile park side compared to apartments. I absolutely love it.
Yeah, I think the turning park-owned homes to tenant-owned homes, that's such a win-win for everybody, because for us, it lowers the expense ratio. But for the tenants, you give them a sense of ownership. And you know how it is nowadays. It's really hard for people to own their own home. That's why when we walk these parks, right, and they're tenant-owned home, they're clean, they're taken care of. You give them that sense of pride and ownership. So yeah, it's a win-win for everybody. A lot of our listeners or viewers may not know a lot about mobile home parks. They're learning through watching us and reading our content. But Tim, can you educate them on the supply and demand of mobile home parks?
Absolutely. We all know that there's an ever increasing demand for affordable, attainable housing. Everyone talks about it. The numbers show it. There's a big undersupply of affordable housing out there. And so, that demand it's always going up. Everyone's looking for, how can I live more affordably? We're one of the only non-subsidized ways for people to do that, to be able to live affordably. The thing is that the supply of mobile home parks is pretty fixed and or declining. So you got two things. They're not making any more of them for the most part. It's really, really hard to get something approved through zoning for a mobile home park. I think the reason for that is, besides people not in my backyard, NIMBYism to mobile home parks, they also don't bring in hardly any taxes compared to other things. Our tax basis is a lot lower than equivalent unit count for an apartment building. They're not really allowing the zoning of these things to create more. And then the ones that are there, the existing mobile home parks, they are slowly but surely getting rid of them because there's a highest and best use of land. A couple of years ago, talking to someone who owned a mobile home park in Somerville, South Carolina. And, it was a great park. They had developed it. The person who was running it, her and her husband developed it. She was in her 70s or 80s, I think. She was getting ready she wanted to retire. She wanted to sell, but, she loved all the tenants. She knew all the tenants. She worked with them. They're like family to her. And she said, okay, I want to sell. And I want you to keep this as a mobile home park. And I said, great, I will 100% do that. And she said, but in order for me to sell, you have to hit the price that these apartment developers came and gave me. So basically, these guys came in and said, hey, the land is worth this much. We can pay you this much because we're going to put an apartment on there and then we're going to sell that apartment. They're going to make a ton of money. And I said, that's like $1 million more than I could pay if I was keeping it as a mobile home park because the returns aren't there. So that's what I mean by these things are getting redeveloped. This person, I haven't followed up, but likely, they sold to what the highest bidder was. And because that land is worth more as an apartment building than a mobile home park, they probably redeveloped it. So that's in the grand scheme of all the mobile home parks, that's one less. And those one less things are happening over time. And it's just, again, it's making the supply even fewer And so with that increasing demand and the dwindling supply, that just makes it so what we have valued at even more. So it's crazy. I mean, everyone talks about affordable housing. We're the only ones doing anything about it. I don't get it. Again, it's good or bad. This is a reality.
Yeah. Going back to the education piece, right? People may think, okay, I don't know anything about mobile home parks. How do you even add value? Matthias, can you talk about some of the areas for opportunities to add value to mobile home parks?
Yeah, many mobile home parks that have vacant lots or pads, we call them. So you can actually buy brand new mobile homes from the factory and place them there. So you're building new units on top of your park. So you can't really do it with apartments, right? If you have a building sitting there, you cannot just add units to it unless you have to make some major expansion happening. But that's something you can do. And like I mentioned earlier, you can also have, if you're lucky, have some people coming in and move their own home into your park. And we have done it several times where we just say, hey, we know moving is expensive, because the home to move might be 10 grand. We give you 2 or 3 months of free lot rent. You have to pay rent while you're getting set up and everything to kind of offset the cost a little bit. And then we have $0 out of pocket. That empty land would have paid us anything anyway. So might as well give people free lot rent to kind of, lessen the burden on the moving cost. And then they're bringing in their own home. It's just adding units to your mobile home park, right? And there's almost all the parks we're looking at. They have all some sort of like vacancy, and some lots are vacant, or you have expansion opportunities, etc. So that's a big one, like getting new homes in the park. When you buy parks with park-owned homes, there's almost always some vacant ones in there. So like with our Alabama deal, we can go in, take some fresh capital, turn them around, put a few $1,000s in them, and then bring them back online and then sell them with long-term rent-to-own contracts, or at least with an option. So that's a big one. It's kind of like the low-hanging fruit because the inventory already sits there. You just have to kind of like freshen it up a little bit, make it enticing for somebody to come in and then, sell it. We also do handyman specials with these. So sometimes a home could be horrible because it's, 20, 30 years old. Somebody trashed it, maybe somebody even passed away and they just left really just a bad unit behind. We maybe just do like some trash removal for a couple $100 and then just sell it as is to somebody like really cheap. And then how the value is calculated on mobile home parks is based on the land lease, like lot NOI only anyway. And anything that's beyond that, like the park on home income or even like the rent to own income is not really considered in the income for most of the banks. So some do it, some specialized banks out there like Vanderbilt, our friends at Vanderbilt do it all the time. But, generally there's a cap rate applied to the real estate value, which is the land and stuff like that. So with that being said, like the actual inventory value that you have on these homes is, put on top basically. So that inventory is already sitting there, right? If you're buying these parks with empty homes, so you can actually turn them into income producing assets and stuff like that. So I think that's very powerful and great. And of course, the low-hanging fruit, like with anything, any other asset class, is if you like to buy under market rents, you can bring it up to market rents. But we are very cautious about that because we are in affordable housing. We don't want to contribute to the affordability crisis. So we do it step by step. And we bought several parks in the last 2 years where we were like half of market rents, and some go in and just go straight to market like after 2 or 3 months. We don't do that. We have one park that we bought, market is 450. We were at 200. We still at 315 right now. And like over a year later, basically, we bought it early 2025. And at the time of this recording, it's almost June of 2026. And we're still far off of market rents because we don't want to crush the tenant base. But that's not a lever we can pull on that end. And then if you talk about, value add also for investors, the tax benefits we just talked about is a huge value add. We have some investors coming in just because of the tax benefits they're getting, which is a value add, obviously, for them. But from a park side, those are the 3 key ones that we're doing on the park side. Something that's maybe like a little hidden value add for parks, which doesn't drive income, but it does passively or indirectly, is just like park upgrades, curb appeal. You can go in. We like to do it too with the Alabama deal, where we just go in and actually offer tenant-owned homes. Hey, we can paint your home. Nothing you have to do. We're just going to go in. There's a guy coming out. If you agree, because it's their home, you have to ask for permission. Paint their homes, and they all look uniform and nice and clean and freshly painted. And as we all know, like a fresh coat of paint can do wonders to a visual, to parks and homes or whatever it is, even to a room. And then also like security cameras, stuff like that. New landscaping, new signage, cleanup, just enforcing cleanup in some of these parks. It doesn't drive income, but it does passively, as you attract better tenants as you're infilling, because it's a nice clean place to live. So that's another value add piece. Doesn't impact NOI directly, but it does have an impact indirectly, if that makes sense.
Yeah, it really does. I'm going to stay with you on this one, Matthias. So everybody knows that every investment carries a certain level of risk, whatever that may be, right? With respect to mobile home parks, what are some risks that people should be aware of?
Yeah, they have the similar risk like we have with apartments, right? You have turnover risk, you have people risk of like trashing units, same thing. But the risks are kind of hedged by the fact that, everything is a little more stickier. People own their homes. So it's compared to apartments, just rent a place. With our end goals, even with apartment homes, that people own their homes. They're not going to trash their own home because they own it. There's pride of ownership. So the risk is kind of hedged there. Even with market downturns, it's a big risk right now. I mean, in 2025, people said survive 25 was all the syndicators' mantra, right? Especially in multifamily. Didn't really feel much of a compression in, collections and rents coming in, etc. Same risk. I mean, the market can go south, but we're very recession resistant. And it goes back to the fact people owning their homes. If a tenant own a home or a tenant in their home stops paying rent, we can get them legally evicted and they lose their home. So they'd rather pay the $400 not to lose their $50,000 mobile home. So it's a no-brainer for them to keep paying somehow. And it's the lowest cost of living out there right now. We really one stop away from homelessness because the cheapest way you can live is in a mobile home, really. And thankfully they're making nicer and nicer. The build quality is great nowadays to bring new ones in, and you can put them in the park with all in costs of transportation, everything for like, $65,000 to $75,000 all in markets where average home is 250, 300 plus, and that's amazing. So I think we hedge in those risks tremendously compared to apartments because we're not as market sensitive as well. That brings also like, if you want to go more technical from an investment perspective, cap rate, decompression, right? I feel like that the supply is so limited to what Tim said earlier. Even if the market softens, you don't really feel that in mobile home parks too much because supply is not going up. Multifamily always has like those, roller coaster rides of like supply going up like crazy because there's a boom and they're buying so many apartments. But everything is done like, in 5 to 10 year cycles. So if like a black swan event happened, like COVID-19, for example, there was a lot of stuff already been planned to be developed in 2017, 18, 19. And there's a lot of inventory coming on market and stuff like that, which floods the market, especially in, strong MSAs and metros. They don't really have the mobile homes and mobile home parks because, like Tim said earlier, they say, oh, not in my backyard. Like, oh yeah, we want to fight affordability, but not that way. This is a little bit too much. I want to make more money here, right? As long as my pockets are full, we can fight it. But if it doesn't fill up my pockets, we don't want it. And so I think that helps us with, keeping the cap rates low enough that we can have some strong returns and, have the appraiser come back strong so we can get the investors' money out of the deal or sell it at a really high price. So yeah, those are the main ones that I'm seeing right now.
No, that's good. As you guys can tell, we're very passionate around affordable housing and mobile home parks, and we definitely prefer them over multifamily. It really comes down to lower operating expenses, more stable tenant base, strong cash flow potential, and the tax benefits, right? So it really comes down to all of that. Yeah, so if someone's watching this and is considering investing, Tim, what should the takeaway be?
So, like with any investment, right? Do thorough due diligence on your operators. Good operator can make a bad deal better. A bad operator can ruin a good deal. So, like, that's going to be your big thing. If you want to learn more about mobile home parks and what that is like, book a call with us. Let's talk. Go to our website, wcginvestments.com, schedule a call, and let's see if it's right for you.
Well said. Matthias, any last minute comments?
Yeah, for the investor base out there, just look at how to protect your hard-earned money in your investment. What can make an asset lose your money? So usually it's because the cash flow is negative and debt service can't be made. Properties go to foreclosure. If you have a asset like mobile home parks, cash flow heavy, your investment is protected already. If you look at our return basis and on how we make the returns, it's heavy cash flow. So even if markets stay flat and even if we don't do a ton of infill, you would still have great returns just based on the cash flow. And the debt service coverage ratio on our deals are sometimes 2x, meaning we can pay the mortgage twice and still have money left. That makes it super, super safe compared to apartments where you just have to cross your fingers and pray because, my pref is accruing in the background. I'm sure it's been treated well on the balance sheet, but I don't really see money coming through yet. We do it quite differently. So there's a little takeaway also from my experience being in apartment deals and compared to mobile home parks. They behave quite differently. So I hope the audience could learn something from this today.
Great insights, guys. I really appreciate it. And if you got value out of today's session and want to learn more about investing in mobile home parks, we will love to connect with you. Make sure to reach out to the team, join our investor list, and keep an eye out for upcoming opportunities. Thanks again for joining us. We really appreciate your time and look forward to seeing you on the next one. Have a great day.
Thank you.